Yeah, Alex, I think, from the retail footwear space, this is one company which has done remarkably well in quarter three of FY22. And hopefully the quarter four also should also be quite strong, considering the fact that, now normalcy has come in, COVID cases are almost next to negligible. The company had mentioned in its last quarterly call that not only new stores would be opened, but even in the existing, stores, the kind of upside which they see in terms of the walk-ins as well as the revenue coming in could be significantly better. So I think if the investor has got a 12 to 18 month horizon, I think one can definitely start accumulating the stock. This stock has also got a large equity stake from Rakesh Jhunjhunwala. So there are a lot of strong HNIs which still continue to hold on to the share. And within the retail space, I think this looks to be an interesting opportunity if one gives a slightly medium to long term.
Right.
Stock.
I think, Alex, Asian Paint is one company which has seen, crude prices going up to almost $200 a barrel and still making money. So I would believe in the near term, the sentiment is negative. If the investor has a 12 to 18 month horizon, then I think he can actually start nibbling in smaller quantities because, the company has a decent amount of pricing power. And despite the crude oil prices, I would believe that, these kind of price increases could actually be passed on maybe in the next 1 or 2 quarters. So I think net longer term prospects continue to be good, but in the short term, margins would be under pressure because a large part of their raw material cost is crude related. So to that extent, I think one could definitely take the negative aspect in the stock in the near term to one's advantage, provided one has a slightly longer term view, at least 12 to 18 months, because I don't think crude prices are going to remain this high, at least for the next 3 to 4 months. Post May, June, prices could come.
All right, this one's from Vijay Lakshmi, and this one also is for you, Avinash. She wants to know what's the long-term prospect for Welspun India, and can she look to average at this current price for the longer term?
Yeah, I think, if you look at the management commentary and the Q3 numbers, Cheryl, I think Welspun India has definitely produced a decent set of numbers. My sense is, I think clearly looking at their business model and their geographical reach, it won't be surprising that FY23 should be a lot better for them. The stock is consolidating, and I would be clearly looking at a near-term kind of upside, over the next, say, 12 to 15 months. So she can accumulate at the current levels, but keep a time frame of at least 12 to 18 months before you invest.
All right. We've got a question coming in from Mr. Parsi, and this one's also for you, Avinash. He's asking whether the current global scenario could impact consumer discretionary sector. He says that he's got Talbro Auto, he's got Lumax Tech. I'm not sure if these match, but having said that, would you say that in any way you could see an impact here in India?
Yeah, I think more than the global news flows, Alex, I think both the companies you mentioned, these are companies which are going to be impacted by the crude prices. So obviously, if crude prices go up further, then that is going to impact automobile sales. And as you mentioned, Lumax Autotech, or for that reason, Talbros Auto, these are auto component companies which are definitely dependent on the large OEMs. So my sense is over the next, say, 1 or 2 quarters, challenges could remain. And definitely there could be a little bit of underperformance. But I think if somebody were to take a medium to long-term view, then I think both these companies should benefit once normalcy happens. And, obviously COVID cases are also completely out. And plus, when crude prices cool off, you're going to see normalcy of volume growth coming in. So longer term prospects are good, but yes, next 1 or 2 quarters, margin pressure is definitely bound to come.
This next query is from Rishikesh, and maybe I would take the liberty to second guess what you would say, Avinash, on this one. He wants to know whether he can buy SUZLON or JP Power at this point in time for the longer term, for the next 3 to 4 years. Do you even think that it is advisable for anyone to look at both of these counters, even for the shorter term, forget about long term?
No, I think, Cheryl, I think it's very simple that these are penny stocks. And I think in any market, especially either in bull markets or bear markets, investors should be careful of where they want to invest their hard-earned money. As far as SUZLON is concerned, some turnaround has happened in its numbers, but it's a long way before the company could reward its, investors. And as far as JP Power is concerned, I think another, SIG company, which is a NCLT case. So I would believe that there are many opportunities in the market where the risk reward is good, where the promoter quality and the business is very strong. So please avoid such penny stocks, because I think in the end, the market rewards quality and obviously good corporate governance, which both these companies have lacked earlier. So I think it's better to keep away from both these companies. So I think Alex, he can continue to hold on. See, ECLERX is basically IT based outsourcing company, and our sense is that this company has rewarded shareholders quite immensely in terms of dividends, in terms of buybacks. If the investor has got a 2-year view, then definitely my sense is that growth will definitely be quite significant over the next couple of years. I think the stock is little illiquid, but if one were to take a longer term view on the business model and on the kind of markets they cater, I would believe that yes, over the next say 2 years, the investor can definitely hope to make a decent risk reward. So he could actually accumulate here and possibly even hold on to the current quantity, keeping a time frame of at least 12 to 18 odd months.
From Amish Soni saying that he's holding UltraTech at a price of 6,722 rupees per share. Should he continue to hold on to it or exit? He's a long-term investor, no doubt. We spoke about cement companies at length at the start of the show in our BNS and Lens segment, but nevertheless, Avinash, UltraTech, should he continue to hold on to it?
Yeah, I think Cheryl, if he doesn't require any emergency funds, then I think he should not, panic and sell out UltraTech at this point of time. Yeah, I think clearly crude prices have gone up, pet coke prices have gone up, but my sense is that over the next, say, 1 or 2 quarters, you could see a little bit of cool off on the crude price front. And hopefully, there is a decent amount of pricing power with UltraTech, considering that it's an all-India, geographically pan-India player. Most importantly, the largest player, having a huge cement capacity. So in terms of volume growth, in terms of the market share, they're well positioned. So I think he should hold on, keep a time frame of at least 6 to 12 months. Things will definitely gradually improve from here on.
Avinash, Tata Power, 108 rupees per share. Arjun Adhikari wants to know, should he hold on?
Yeah, he should hold on. I think my sense is he has a 12 to 15 month horizon, but definitely, he could expect a decent upside.
Okay, Srinivas wants to know whether he should buy IEX right now for the long term. What's your take, Avinash?
Yeah, I think recently the company has started gas trading contracts, and this is definitely a good positive development for the company. I think he should continue to hold on, even at current levels he can.
Avinash, Karur Vysya Bank, would you hold on to this for the long term? I think we have a viewer who's been holding for quite a while.
Yeah, I think if the horizon is at least 12 to 18 months, then I think this bank definitely is poised for a good turnaround, so he can continue to hold on.